In this MB Financial Midterm Election Update, we're going to review the impact of the midterm elections on the U.S. budget deficits and debt and business. I'm Andy Bush, political and financial strategist and host of the Engage radio show. Now, the bottom line, a Republican Congress will keep the budget deficit on a temporary downward path before it explodes higher in 2016. Now, we now know that voters have decided to change the current structure of Congress by voting in Republican majorities to both the House and the Senate. Now, since the peak in 2009, the U.S. budget deficit has fallen sharply during the last few years. According to the Congressional Budget Office, or CBO, it is expected to shrink further in 2015, now assuming no changes. The federal budget deficit for fiscal year 2014 is expected to be about $506 billion, roughly $170 billion lower than 2013. Now, this translates into 2.9% of GDP versus the massive 10% experienced during 2009. The problem is that the deficit begins growing again in 2016 as revenues would only slightly grow faster than the economy and spending would increase more rapidly. And then there is the debt. Oh man, the total debt of the United States is projected to be $17.8 trillion by the end of fiscal year 2014. Now, what's truly scary is the cost of the net interest on the debt. The CBO projects this to rise from $231 billion in 2014 to $340 billion in 2017 and $800 billion in 2024. Massive jump. And this rise is estimated during an environment of extraordinarily low interest rates. And that means the estimates will likely be too low and the burden will grow much more rapidly if nothing is done to change the trajectory. So how does the U.S. do this? Well, it's pretty simple, really. Either you increase tax receipts or you lower spending. As you can tell, this sets up a problem for Republicans and Democrats. Now, Republicans generally want lower taxes and lower spending, and Democrats want higher taxes to pay for the higher spending. The key question is what is driving the higher spending overall? It's mainly entitlements like Social Security, Medicare, Obamacare, and net interest payments. As the CBO states, boosted by the aging of the population, the expansion of federal subsidies for health insurance, rising healthcare costs per beneficiary, and the mounting interest costs on the federal debt, spending on the three fastest growing components of the budget accounts for 85% of the total projected increase in outlays over the next 10 years. As an inflection point, Social Security trustees estimate that Social Security disability insurance will run out of funds in 2016, and that means that they can only pay out what they take in at about 70 cents on the dollar. What this all means is that Congress will need to begin to take steps to fix entitlement spending issues to change the trajectory not only of the budget deficit, but also of the U.S. debt load. A unified Congress has a wonderful opportunity to present their plan, the Republican plan, to deal with these issues and create legislation. The problem remains as to whether President Obama would veto any plan to rectify the deficit and the debt problems. Now, this doesn't mean there won't be intense interest on the issue as we unfortunately begin another election cycle with the 2015 campaign kicking off for the 2016 presidential race next year. If Obama vetoes any deficit reduction bills, there remains a risk that we could see another government shutdown or threat over default. And I put these only at about 15% at this time, but the risk is on the upside. Now, the main takeaway is that while we're in budget deficit remission, the debt cancer continues to grow. A new president and Congress will be forced to deal with the issue in 2016, but not in 2014. Thanks for watching this MB Financial Midterm Election Update. I'm Andy Bush.